Hello, everyone. Welcome back to another episode of my weekend market analysis series. I trust you are having a great weekend so far. And if you're ready for a deep dive into the gold market, well, fasten your seatbelt as we embark on an exciting journey through the XAUUSD's market dynamics. In this analysis, we are going to be arming ourselves with the knowledge to navigate the opportunities and challenges awaiting us in the coming week. But before we begin, let's start by reflecting on last week's performance. Gold's price action took a breather, retracing after a stronger than expected US non farm payroll report, which shifted market expectations around an aggressive rate cut by the Federal Reserve. And of course, this saw the US dollar gain strength as the market adjusted to the news. Now, as you can see on the screen, our setup last week included a critical key level around the 2643, the pink line you're seeing on the screen, and a couple of trend lines that help sustain our bullish bias. The fact that price was trading above both our ascending trend and the key level was a very good sign that we will be maintaining buying ideas in this market. Now, another factor here that went on to support this bullish idea was this descending trend line, as you will see here. We saw price broke out of that structure at the beginning of the week, a move which we actually took advantage of. Then we saw price come back to do multiple retests of that trend line to further emphasize the bullish potential in this particular market. However, during this time, price action was largely confined within a 400 pip consolidation range, which indeed reflected the uncertainty in the market ahead of the NFP report from last week's trading session. We were able to take some good trades during the week. And for those of you joining me for the first time, don't worry, I've left a link in the description box below that breaks down our trade entries and decisions from last week. Feel free to check them out for educational purposes. Moving on, now with the US job growth accelerating in September and the unemployment rate slipping to 4.1%, the Federal Reserve is under less pressure to cut interest rates aggressively. Now, this aims at a potential 25 basis point reduction at their next meeting. However, there is still a small but significant percentage of market participants projecting that the Fed may leave interest rates unchanged. Now, this development has positioned the US dollar for a rebound in the coming week. That said, geopolitical tensions in the Middle East cannot be taken out of the picture as it continues to cast a shadow over market sentiment. Now, if this uncertainty persists, we could see gold regain momentum as investors tend to hedge their portfolios with safe haven assets like the gold commodity. As always, we must keep an open mind to both buying and selling opportunities as we navigate the week ahead amidst a crucial crossroad between the bulls and the bears around the record high territory we are in. In this video, we will be breaking down the chart, identifying our key level for the incoming week, the market trend, and structural patterns to help identify where price might be heading and how to position ourselves accordingly. Stick around with me through the course of this video as I do have a simple trading setup to work with, and I'm excited to share this insight with you. Before we proceed, a quick reminder, this presentation is designed basically for educational purposes and not financial advice. It's always wise to consult a professional before making any financial decisions. With that said, let's dive right into the business and let's uncover what opportunities the week have for us. Now, my first point of contact this week is going to be on the 4 hours time frame. There is not really much to say on the daily time frame. I've talked about this in my previous video. If you missed out on that video, I encourage you to check the link in the description box below to have a review of that video and see what I talked about there. So the most important thing at the junction here is that price action is at an all-time record high zone where it is expected to see choppy market conditions around this area out of fear that the price may crash from this area. So those who had capitalized on that strong move into this territory may want to start closing some of their position, which could result on the chart as retracement move, choppy market conditions, or consolidation phases. But before we go into the technical details I have here on the 4 hours time frame, I would like us to turn our focus to the upcoming event that could shape market sentiment next week. By reviewing the economic calendar, we can pinpoint how this upcoming event will shape price action, helping us spot potential correlations with specific technical patterns on the chart and better time our positioning more effectively. Now, based on the asset we are looking at in this video, we will be focusing on high impactful event from the United States economic docket. Now, the first event for next week is coming in on Wednesday, October 9th, and that is the publication of the FOMC minutes. Now, this publication provides insight into the discussion and decisions made by the Fed regarding monetary policy, which of course includes interest rate decisions. This minute is crucial to market participants' decision because they offer clues about the future direction of interest rates. Now, on Thursday, October 10th, we are looking at the Consumer Price Index, which is the average change in the prices of goods and services in the last 30 days, indicating the inflation level in the United States. Then on Friday, we are looking at the Producer Price Index, which is the measure of the average change in prices that producers receive for their goods and services in the last 30 days. Now, on that same day, we are looking at the Michigan Consumer Sentiment Index. This is an index published by the University of Michigan, and it measures how optimistic or pessimistic consumers feel about the US economy's future. These are the events we are looking forward to, and of course, we all know that the anticipation of this event has a way of influencing how the market is going to behave, which will reflect on the chart as price action. Talking about price action, we scale down into the 4 hours time frame, where I do have a simple trading setup after taking into account the character of price action in the last 2 weeks. And when I did that, this was what I was able to come up with. Now, it is quite clear that the market has been confined within a range-bound structure. As you will see, we have a supply zone and of course we have a demand zone. So when price comes into that area around the 2,670, we see sellers push price to the downside, as you will see here, a huge barrier for buyers. And then if price comes into the 2,632 area, we see buyers negate all attempt from the sellers to break through that structure. And this also happened last week as we saw a sharp rejection right here on Friday despite the impressive US non-farm payroll reports. Now, with a consolidation phase here, the question now is, where will price action go? Are we going to be seeing a situation where the supply zone will be breached and broken to the upside to maintain the bullish bias in this market? Or are we going to be seeing the demand zone broken to the downside to incite a sell-off? Now, to help us navigate through this structure, I was able to identify two structures here that will be guiding our decisions. The first one here is my key level for next week, which is going to be situated at the 2,630 around that demand zone. And you know how we use our key levels. As long as price remains above them, we will continue to look out for patterns and structures that supports the idea of buying. And the only condition that will make us sell is for this level to be breached and broken to the downside. Now, besides the key level here, there is another interesting pattern which I would like to show you, which is looking like an uptrend continuation pattern in the form of a pennant. Now, to give a visual representation of what I'm talking about, if we take into account this impulsive move, we saw that as soon as price action tested that all-time record high, we saw price go through a consolidation phase, evolving into an uptrend continuation pattern, as you will see here. Now, what we want to be seeing here is for this resistant line of the pattern to be broken to the upside to make us feel comfortable in a bullish idea. However, if price action does break down the structure, we could be seeing signs of selling pressure that could give us an opportunity to sell even before the breakdown of that demand zone happen. But depending on what happens around the 2650 at the beginning of next week will determine what we are going to be doing. And trust me, I will be with you in the comment section of this video to give you an update after monitoring the character of price action during the early hours of next week. So there you have it, my in-depth look at the XAUUSD for the week ahead. If this video helped with your independent trading decisions, a thumbs up will be greatly appreciated. Your support means the world to me and it helps others find this content too. And if you haven't yet, consider subscribing for more insights, weekend market preps, and regular updates. Thanks for watching. See you all in the comment section on Monday morning as we get prepared for the new week. Do have a wonderful evening, everyone. Bye.